All right, let's do a weekend analysis of the markets. I've been watching both Wall Street, well, in fact, all three: Wall Street, FTSE, and Germany throughout the week, and I think Wall Street is still very much interesting because on this higher time frame, what's building here, we have this push up and this push up, with this secondary one being significantly significantly weaker than this first one. So what's building here on this time frame is a massive turn, which I mentioned last time, right? That's on the daily. On the 4 hourly, what this wants to do is to go up and try to make this high again. And what correlates with that is other markets have more or less reached or is about to reach the same area, right? So in this case, on this time frame, Wall Street is lagging behind. Let's go back to Wall Street. Before this happens, before this massive push up to at least that level, on the hourly, I'm anticipating a move down. So let me explain it from this time frame, and I'll go back up to the 4 hourly. So we have this push down and this push down. What I am anticipating is another push down, which doesn't come lower than here. And so anywhere between here and ideally here, I think. But it could come in between this area. But in any case, I don't anticipate it coming lower than here. Once we have that pull down, it can then gear up for a push up. So let's say we have the push down to this level and then a blast up. Now, depending on how quickly this comes up, we might be able to reach this level or to beat it. But it all depends on how this comes up. If it comes up in a strong manner, then yes, we're going to reach it or beat it. If it comes up in a weak-ish manner, it will be a sign that sellers are gearing up to sell and buyers are afraid. Because just from looking at this, between here and here is a big danger zone, right? Because that's where sellers are, right? So on this time frame, you can see it clearer here. Between there and there, that's where sellers are. Have a look at this. Have a look at this between here. Let me see if I can draw that better. Here and here. That's where sellers are also. So although we've had this push up and then a secondary push up, buyers are very hesitant because of the 3,500 or 35,000 rather level. Buyers are hesitant to take it up even further because sellers are right at this level. So and also the 34,500 is also psychologically an area where people will react from, either sellers reacting hard or buyers taking their money out of the market. So it really depends on how things come up. What I am quite comfortable saying at this point is that we're headed downwards for this coming week. We're headed downwards and then upwards. to the 34,500 level, potentially higher. So that's what I'm looking at this coming week. Monday is a national holiday in the US, so that might slow the markets down a great deal, even in Germany and UK. So it might be a case of things continue to go upwards in a very still manner, so not with a lot of force. And then on Tuesday we have to drop down. With things pushing upwards on Wednesday, maybe Thursday, potentially Friday at the very latest. But I'll be interested to watch this and see how it comes down. If it comes down in a roughly slow manner, then yes, we're going upwards. If it comes down in a sharp manner and breaks this level, okay, we'll need to reassess. But right now, my thinking is this will come down and we'll have a push upwards. So Wall Street still looks to me to be the best market for a buy. I wouldn't sell Wall Street. Let me rephrase that. I don't think Wall Street is an area to sell. It's a market to sell, rather. I think it'll be better to watch what happens with the sellers fading them, and then using that to get ready for the buy. Even on other markets, so Germany, although it's in an area where sellers are, or coming up to an area where sellers are, it's still so between there and there. So where sellers are, it's still not really ideal. FTSE is a similar thing. So we've had that push down and then this push down. But right now, across all markets, it's this guy versus these guys. Let me do that again. It's this guy versus this guy. This guy who came down and this guy who pushed it up. You can see on this market, they're quite equal in terms of strength. So on this market, as prices come up to this guy, as it comes up closer, I anticipate a lot of spikes because I can see buyers and sellers fighting a lot on this market, especially because they are of equal strength. So I can see prices doing that sort of thing on this market. Let's check out Germany. Similar thing for Germany. We've had this push down and then this push down and then this push up. You can see it's quite equal. Let's check out Wall Street again. Wall Street, on the other hand, so far is not. So this push down is clearly more powerful so far than this push up. The only thing is this push up is pretty much in the middle, potentially in the middle of its journey. What I mean by that is, although I think this will come down, or I'm anticipating this coming down, there is a chance that it continues to go upwards in a very steady manner, because this move upwards isn't complete yet. and won't be complete until we see what the sellers do, whether they react from this level or from up here or closer to up there. That's why right now it'll be better to see what happens with this market, especially as Monday is a national holiday. It'll be better to see what happens. If this comes down, great. If it goes up, reassess. If it goes up, then it might be a case of, okay, before this continues upwards, it'll come down, or will continue upwards in a steady manner. I really don't know on that scenario just yet. But if it comes down, this scenario I am anticipating. If it comes down, it'll be a case of, okay, this is ready to go up. So there are several scenarios. Right now, I don't think there'll be much happening on Monday. So there'll be a chance to have a look at the markets again and see what the latest data suggests and what's the most likely thing to happen. All right, I'll leave it there for now. Bye for now.